let's just talk about the moment we're in. At some point, you look around and realize the world has changed and you need to adjust your strategy accordingly, whether it's geographically or the business mix. You made that decision coming out of the last crisis. Does this crisis validate your response last time around, or do you need to make some changes again?
Well, firstly, Jonathan, thanks for having us on the show. Clearly, what we designed was a business that in times of severe stress would be fine. And when markets are very active and volatile, we would still perform very well across the whole investment banking franchise. This was that crisis, and that's what we delivered with a 15+% ROE. So I think it validates the strategy, but it's our strategy. It's not for everybody. This is what we chose. We didn't want to be credit heavy. We want to be flow-based, fee-based, asset-based, and that's what we are.
James, there's been a strong argument over the last week. We've heard from several CEOs of Wall Street institutions on this programme that we haven't fully realised the risks around this recession, that fiscal policy has made it more difficult to assess creditworthiness, and there's going to be more pain in the months ahead. James, would you characterise things a little bit differently?
Well, for the economy, it's very hard to tell. I mean, it depends on, how quickly the COVID outbreak that we're seeing across the South and Southwest subsides. How well people coming back to their place of work functions, continued liquidity and stability in the market. So it's too early to tell. But, we're not a credit-centric institution, so for us it's less relevant. But for the marketplace, until people get back to work, you're going to have consumer credit problems. There's no question about that.
James, even corporate America is starting to face bankruptcies at a much faster pace here. We saw Goldman Sachs take an impairment tied to Hertz yesterday, and that's just one bankruptcy. How does the industry start to get ahead of the bankruptcies here?
Well, I don't know that you can get ahead of it. I mean, it's a natural consequence. Small and big businesses struggling when, they haven't got clients coming in. I mean, look at the restaurants. Look at all the small businesses, the hairdressers and the doctors and the dentists, and before you even get to big companies. So, that's part of why we saw such a massive wave of financing in the last quarter, as a lot of companies got ahead of that and built up stronger balance sheets in anticipation of these tougher times.
I want to talk a little more about the small customer here, given that the E-Trade deal is close to closing here. Yes. Retail traders are front and center in this market and buying Tesla at 340 times earnings. Are they flirting with danger? Is this the top of the market here?
Well, if you can tell me when the top of the market is, I'd be in a different business. So, no, the market reflects, future expectations on earnings, and that's what we have. Retail investors have clearly been more active. We've seen a lot of new investors coming into this market, as we saw whenever there's a period when the market's on fire, which it has been the last couple of months. But no, I mean, Tesla should be valued based upon what Tesla's been able to do, and they've created an extraordinary company. So I don't connect those two things.
James, I don't expect to get a price target from you on Tesla anytime soon. I will ask you this, though. Wall Street has seen huge amounts of success in the last couple of months, and it's a question I get asked a lot, so let me ask it of you. What's the best way of explaining that, James, in a moment like this? How Wall Street has done so well in the last couple of months when the economy and the labour market is still pretty much on its knees?
Well, I guess I'm not sure I'd describe it as huge success, Jonathan. I think we and maybe one other bank are the only banks to beat their cost of capital. They've had huge revenues in trading revenues across the street, but they've had huge credit provisions. And what the banking industry has done has been to support corporations that needed support during this crisis. That provided the financing that let those companies stay stable and position themselves for future growth. So in absolute terms, the profitability of Wall Street is actually dramatically down. We have a different business model. That's why we performed the way we did this quarter. But I think if you look at the banking sector, the hits that they're taking, consumer credit, small business credit, corporate credit, the bankruptcies that Sonali was just talking about. So no, I don't think there's a disconnect. I think the banking sector reflects what's going on in the economy.
Speaking of banking sector here, James, you're about to take on a big digital banking initiative in the face of low interest rates. You have 15% returns on equity here. Why mess with that?
Well, that's just one quarter. Quarters come around with alarming frequency every 13 weeks. And, I'm not getting overexcited about what we did. It certainly doesn't change our long-term strategy. Our long-term strategy is to be the premier investment bank and premier wealth and asset manager in the world. And that's the balanced business model that we're doing. E-Trade isn't messing with that, it's amplifying it. I'm really excited about the E-Trade upcoming closing.
You said on the call, this is real money, not just kids playing. This is real stuff. What did that mean, James? What does that mean? What did you mean by that?
Well, you get a lot of people coming to the market, opening accounts with a few $100s and, investing in a single stock. And, sure, that can be fun. And, if it's going to do you no harm, there's no problem with that. You obviously shouldn't be putting in savings or money that you need for something more substantial in life. But what we've seen with E-Trade, yes, they've opened hundreds of thousands of accounts, but they've brought in tens of billions of dollars of new money. So with those accounts have come very large assets. And that's what I meant by that.
James, let's build on the moment we're in right now, the political, societal changes we're witnessing. Companies are being held to higher standards, and quite clearly they need to be. How companies ensure they recruit from a more diverse background that's perhaps a little bit more reflective of society is a huge, huge issue at the moment. And I think you would agree with me that the time for virtue signalling is over. We want real change now. Can you walk us through what Morgan Stanley is doing to drive that positive change, the metrics that you're holding yourself accountable by?
Yeah, Jonathan, I mean, it's a society issue, and it starts with education, works its way through the colleges, the universities, and then to places of employment. And, we've made progress in the last decade, but we're not where we want to be. We're not satisfied. And we made a number of changes recently which reflected that. We've created a new diversity institute reflecting what we did on the sustainability side, where we have one group whose job is to manage our diversity programs across the whole company, whether it's recruitment, vendor management, employee development. And that group is headed by somebody called Susan Reed, who's going to do an amazing job. She was put on the management committee. We also added a new core value to our firm. We've had 4 core values for forever. And we added a 5th value, which was a commitment to diversity and inclusion. We wanted to specifically call it out. I'm going to chair the institute, and we're staffing that with people from across the company. We're obviously investing tens of millions of dollars in it, but it's about making real change. Ultimately, companies need to reflect the societies that they live and work in, and that's our aspiration.
James, speaking of reflecting the society we live and work with, what does this mean for recruiting? Will the standard Harvard, Wharton, MBA be the typical Morgan Stanley banker, or have you started looking to different places?
Well, firstly, we have a lot more employees than investment bankers. We have over 70,000 employees, Sonali, and a couple of thousand of those sit inside our investment bank. So we've been looking at other academic institutions for a long time. We have very strong relationships with the predominantly black colleges in the US, but we're going to get more aggressive in that. But it starts earlier. We have to introduce a much broader community to the kind of career opportunities that you can have at a place like Morgan Stanley. Whether it's writing new code for some of our technology platforms, whether it's working with our marketing teams, whether it's being a trader on our foreign exchange desk, whether it's managing wealth for individuals across the country. There are so many different careers, and we have to open people's eyes to that.
Or an employee in Hong Kong. James, a really difficult moment for Hong Kong. You guys have been there since 1987. It's the home of your headquarters in the region ex-Japan. What's your message for the people of Hong Kong right now, James?
Well, we stand by Hong Kong, and we take a long-term view. I mean, obviously, with the transition from the UK to China, which, is occurring over a multi-decade period, there are going to be tensions and pressure points associated with that. That's what we're seeing. But listen, we remain committed to our Hong Kong business. We have tremendous employees over there, several thousand. They do a great job. And we're also in mainland China. We took a majority share in our business over there, Washington Securities. So listen, I'm not going to get in the eye of the political storms that are circulating, but my commitment is to our clients and our employees that we remain committed to that market.
James, it's a subject that makes a lot of bank CEOs feel very uncomfortable. They're very wary of what they say because they don't want to upset the Chinese Communist Party. But given what we're seeing politically speaking, is there nothing that makes you a little bit uncomfortable about allocating more capital to invest in that region?
Listen, Jonathan, we take a very long-term view. Again, I'm not the political spokesman for this country. Others are much better suited to that and to figure out what the right trade and economic policy is with our major trading partners, including China. But I will say we will continue to invest in the region because we have clients across the region who need access to the capital markets and the businesses that we prosecute around the world.
James, I know last question here for you. You're balancing a record quarter here, and those bankers and traders are wondering, what does pay look like into next year while you're also looking to keep a lid on costs?
Well, we kept a lid on costs. We improved revenues by about $3 billion, and we kept our compensation ratios consistent with what they were in the first quarter of the year, and we kept our non-compensation expenses basically flat with $3 billion of revenues, so huge operating leverage. Sonali, we pay on a full year, so let's see what the second half of the year delivers. We pay for performance. If people perform, they get paid. It's as simple as that. But we also have shareholders, and we have our communities that we're investing in and supporting, so it's too early to worry about compensation.